Welcome to today's Explainer. Look, we're diving straight in today. We are peeling back the curtain on the banking world so you can finally see exactly what is happening with your hard-earned cash. We're going to unmask the 9 hidden truths about the banking system that you probably interact with every single day, honestly, without even realizing it. If you've ever wondered why banks seem to just pull new fees out of thin air, or if your savings are actually as safe as you've been led to believe, you are in exactly the right place.
Now check out this quote. This isn't just some modern internet drama. Henry Ford actually said this a century ago. It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. It really highlights this fascinating us versus the system dynamic. The core idea here is that the mechanics of how our money is managed are kept intentionally complex. But today, we're breaking that complexity down. We're translating those complicated financial mechanisms into plain English so you can take back control.
Which naturally brings up a massive, unavoidable question. Year after year, we hear the news about banks raking in absolute record profits, right? So, if they are pulling in billions, where exactly does all that money come from? And, more importantly for you and me, how much of it is coming directly out of our own pockets through hidden systems and invisible fees?
To answer that, we're going on a quick 3-act journey today, plus a final act for your escape plan. First, we'll uncover the grand banking illusion. Then we'll expose your money's silent thieves. After that, we'll look at the true cost of loyalty. And finally, I'm going to give you the exact steps on how to outsmart the system.
All right, let's get right into part 1, the grand banking illusion, and the mechanics behind the curtain. So when you think of your bank account, what actually pops into your head? Do you picture this giant, heavy metal vault with neat stacks of cash inside, and one of those stacks has a little sticky note with your name on it? Well, here is hidden truth number 1. That physical vault, it's a total myth. Your money isn't just sitting there, untouched. It is simply digital numbers on a screen. Banks take those numbers and immediately use your deposits for their own business, literally lending your money out for mortgages, auto loans, and corporate investments to generate their own profit. And that brings us to hidden truth number 2, fractional reserve banking. I know, it sounds super technical, but let's just break it down. Imagine a bakery that sells the exact same loaf of bread to 10 different people, promising each person they'll get it when they come in. Or think of it like filling a giant swimming pool with a single garden hose, and then immediately siphoning off that water to fill other pools. For every dollar you deposit, banks keep only a tiny, tiny fraction in reserve, and they lend out the rest. It multiplies the money supply, sure, but it relies entirely on the assumption that not everyone will ask for their money back on the exact same day.
Which leads to hidden truth number 3. This entire setup relies 100% on trust, and we've seen what happens when that trust breaks. Think back to the global financial crisis. In 2007, risky investments expanded rapidly. By 2008, the system jammed. It was literally a game of musical chairs where there simply weren't enough seats. When panic sparked bank runs, the physical cash just wasn't there. That's a liquidity crisis. Now looking toward 2026 in our current setup, we do have safeguards. Stress tests, which are basically bank checkups, along with mandatory capital requirements and FDIC insurance, act as government safety nets. They keep this inherently fragile, tightrope walking system stable, provided trust doesn't break down again.
Okay, moving right along to part 2, your money's silent thieves. How money drains away while we aren't looking.
Hidden truth number 4 is inflation. This is quite literally the silent thief. We're always told banks are the absolute safest place for our money, right? But if your bank account pays you 0.05% interest, while the slow rise of prices, inflation, is running at around 3%, you are dealing with a negative real return. Your savings are quietly shrinking. It's exactly like a leaky bucket. The balance number on your screen stays the same, but your actual purchasing power drips away, drop by drop. Your money is safe from physical theft, sure, but definitely not from the silent effects of inflation. And then, of course, we have the actual fees. This covers truths 5, 6, and 7. Truth 5, foreign transactions. You swipe your card abroad, and the bank uses dynamic currency conversion, which is basically a hidden markup. One traveler actually racked up over $1,200 in surprise fees on a short 5-day trip just from this. Next is truth 6, the exchange rate. Banks use what's called a currency spread. That means they intentionally give you a worse exchange rate than the market and just keep the difference. It's a baked-in premium, kind of like paying for airport water. Finally, truth 7, dormant accounts. If you simply don't use an account, they hit you with an inactivity fee. $10 to $20 just evaporates every month until the pond is bone dry.
Now, don't worry, you aren't completely defenseless here. Let me introduce you to Regulation E. You can think of this as a literal seatbelt for your wallet. If you spot a sketchy charge, say a random $70 fee buried in your monthly statement, and you report it within 60 days, by law, the bank must investigate and restore your funds. Now, banks won't always volunteer this info, and they might drag their feet, but the law is absolutely on your side here. You just have to treat your bank account like a garden. If you don't check it regularly, the weeds are going to take over.
Let's roll right into part 3, the true cost of loyalty and the myths banks sell you.
Now I know some of you are probably thinking, wait, I've known my banker for years. They're super nice. Well, brace yourself for hidden truth number 8. That friendly banter is often just a highly effective sales strategy called relationship banking. It's completely disguised as friendship, but the goal is to build trust as a gateway to push profitable products. Think of a chef coming to your table, flattering you, just to get you to order a highly marked up dessert you didn't even want. When a friendly banker suddenly offers you a $50,000 credit line out of the blue, you really have to ask yourself, is this for my benefit, or is this just to meet their strict monthly sales targets?
Which leads us to hidden truth number 9, and how this profit engine impacts our everyday life. Have you ever stopped to wonder how banks actually afford all those flashy credit card reward points? It's funded by something called interchange revenue. Every single time you swipe, the merchant is hit with a hidden 2 to 3% processing fee. The bank keeps this fee. So, to cover it, stores just have to raise their prices for everyone. You are paying those fees indirectly. Plus, those reward points are specifically designed to entice you into swiping more, which often leads people into compound interest debt traps. Like a snowball rolling downhill, missing just one payment turns those quote-unquote free rewards into a very, very expensive reality. And while we're doing reality checks, let's talk about the number $10,000. We talked about how the bank operates like a business with your money, but they also kind of act as a surveillance hub. Anti-money laundering, or AML rules, act as security cameras for your cash. If you deposit or withdraw more than $10,000, it automatically triggers mandatory reporting to the IRS. While this is obviously meant to stop crime, the big takeaway for you is that transparency is absolutely essential. Keep your records, because your money movements are always on the radar. Okay, take a deep breath. We've uncovered the illusion, the hidden thieves, and the sales strategies. Let's get to the good stuff. Part 4. How to outsmart the system. Transitioning from education to empowerment. So here is your actual escape plan. 4 really straightforward steps. Number 1, comparison shop. Do your financial due diligence. Go find accounts with 0 foreign transaction fees and no dormant account penalties. Number 2, automate monitoring. Let technology be your watchdog. Set up automatic alerts on your phone for any unusual activity. Number 3, diversify funds. Please don't let inflation eat your wealth in a 0.05% account. Look into high-yield savings or CDs. And number 4, question offers. Whenever a banker gets overly friendly with a shiny new loan or card, just pause, scrutinize it, and double-check who actually benefits from the deal. To wrap this all up, let's quickly review the core concepts you need to remember. Banks are profit-driven businesses. They are not static vaults. Hidden fees and the slow leak of inflation will actively drain your wealth if you aren't paying attention. Technology and your own vigilance are your absolute best defenses here. Ultimately, understanding these mechanics is exactly like knowing how your car engine works. You don't have to be a master mechanic to drive the car, but understanding it, that means you will definitely drive smarter, perform your due diligence, and stay firmly in the driver's seat of your financial life.
So armed with all of this, I want to leave you with one final kind of provocative question. If your traditional bank account is basically a leaky bucket managed by a profit-hungry business, where should you actually keep your money to make it grow? Think about that for a second, because that is exactly the secret we'll be decoding in our next explainer. Thanks so much for learning with me today. Stay vigilant out there, and I will see you next time.